right, welcome to Talking Investing. I'm Tom, and as always, this is not financial advice. Today, I want to talk about a couple of things that are going to happen later this week, one on Wednesday and one on Thursday, that could have a major impact in the direction that the market is going to be going, and that includes the equity markets as well as the cryptocurrency markets and Bitcoin. So if you're new to the channel, please remember to subscribe and hit the notification bell. Also, if everybody could please smash the like button, I would appreciate it. Lastly, if you would like, you can become a member of the channel by hitting the join button on the YouTube page. It's right next to the subscribe button. If you don't see a join button, then there should be a link in the description below. Members get some members only content. We've been doing this for a few months now, so there's a bunch of content in there. In addition to that, every Tuesday after the market close, we do a members only live stream. On that live stream, the members get to pick a company for me to do a deep dive video on. So we would love to have you support the channel. Let's talk about what's going on this week, and let's start with the Fed. The Fed meets this week, and at 2 p.m. on Wednesday, they will announce what it is that they concluded and what the rate hike is. Essentially, this shows you what the market has priced in. So right now, the market has priced in a 98.1% chance that the Fed is going to do a 25% basis point rate hike. There is a 1.9% chance that they're going to do a 50%. If you look down in the details, yesterday that was actually 0. So a couple of people are panicking at the last moment and moving into the 50 basis point camp. We are at 98% on 25 basis points. And if you look back a month ago, 50 basis point was at 32%, and a month before that, it was even much higher than that. So the market's expectation has changed drastically over the last 30 to 45 days. January has been a very good month for the stock market, so all the equity markets are up, and it's been a phenomenal month for the cryptocurrency market. Bitcoin is up huge so far in January. However, this is an event that I think could be a gigantic whammy if it goes the wrong way, because you can see with 98% confidence, the market thinks we're getting a 25 basis point rate hike. If that was to come in higher, if that was to come in at 50, I do think there would be some serious damage done to the market in the short term, because you can see 98% of the people are not expecting that. So this will take the market by a huge surprise if that happens. Now, that may or may not happen. I'm going to show you some numbers as to why I think there's a possibility, a legitimate possibility that this could happen. I mean, obviously, the consensus is now that it's going to be 25 basis points. 98% of the market thinks it's going to be 25 basis points. However, that is not consistent with what Jerome Powell has been saying for the last several months. So I want to show you a couple of different things that lead me to believe that there still does exist a chance, a fairly reasonable chance, that this could be 50 basis points. Okay, I think this is the easiest graphic to show this. This is from the minutes of the last Fed meeting. This is a table where all the Fed members think the Fed rate is going to be year by year by year. So the majority of the members think we're going to get up to either 5.25 or 5.5 at some point this year. A couple of the members actually thought we were going to get to 5.75. There's two members that thought maybe we would stay just at 5. You can see even the most optimistic member of the Fed thinks there's going to be at least a 50 basis point rate hike throughout the year in 2023. Now, that doesn't mean that it's going to be in January, but most of the Fed thinks there's going to be a 75 basis point hike or a 100 basis point hike, with a few thinking 125 basis points. So when you look at this really isn't indicating the Fed's going to do a 25 basis point hike on February 1st. The expectation at the time they did this was that it was probably going to be 50 basis points. And that would be in keeping with what they've been doing for the last year. So I'm going to take you to that chart in a minute. So you can see, whereas the Fed was between 5.25 and 5.75, if I go all the way to June, the market fully prices in. The market believes that this is going to top out somewhere between 5 and 5.25. So the market already disagrees with what the Fed told us in the last meeting that they had. So you're going to see this is May of 2023. This is the market's expectation. So again, that would be a total of somewhere between 25 basis points and 50 basis points for the rest of the whole year. So that is in conflict with what the Fed's members said. Their majority thought either going to be 75 or 100 basis point hike. These expectations are what concern me, because the Fed has been very aggressive. Jerome Powell has said at, the last 3 or 4 months, every single opportunity he gets, his fear would be that he doesn't raise rates enough and they don't catch inflation in time. He is not afraid of raising rates too much. So the market has gotten very optimistic, and it may very well be that we get a 25 basis point hike. So I'm not saying it's definitely going to be a 50 basis point hike. I'm just saying the market has basically dismissed that as an option, and it seems to me like that is still quite a reasonable option. Let me show you one more thing. Okay, so this is a table showing what the Fed did in 2022. So you can see we had 50 basis points in May, 75 in June, 75 in July, 75 in September, 75 in November, and then 50 in December. So that's 6 rate hikes in a row that are more than what everybody is anticipating in this rate hike coming on this Wednesday. So it would be a little bit of a pivot for them to do 0.25. So again, I think that probably is going to be what happens, but I do think there's still a very serious chance that it could be 50 basis points. And you only have to look at this schedule to see that. They haven't done anything less than that essentially in the last year. Now, our data points are coming in a little better. CPE is coming down. Inflation is starting to get under control. But the other thing Jerome Powell's been animate about is that he's not going to take just 1 or 2 months worth of data. He wants to get this. The Fed's target rate for inflation is 2%. So it is much, much higher than that right now. So the rough part of this is I don't really see a great outcome because I would say there's almost no chance they raise rates 0%. That would be stunning. The market's already anticipated 25 basis points. And so let's say we get 25 basis points. That's not really a catalyst for the market to move forward. It's already priced that into a 98.1% certainty. So this is one of those situations where there's not a lot of upside. It's most likely going to be what we think, but there is downside if this is worse than we think. And by worse, I mean if it's 50 basis points, that is going to be a shock to the market. So this is the number one thing I'm concerned about for this week. This is Wednesday. However, there's something on Thursday as well. Actually, there's 3 things after the bell closes on Thursday. Okay, this is this week's summary of important earnings. So I'm going to skip all the way to Thursday. Yes, there's a lot of other important earnings, but something's lining up here that's very, very specific. On Thursday, after the market closes, you have Amazon, Apple, and Alphabet. Here's a list of the largest companies in the US. So the 3 that are reporting are number 1, Apple, number 3, Google, and number 4, Amazon. So 3 of the top 4 largest companies in the entire United States market are all reporting earnings at the exact same time. So obviously these things tend to drive the market, and you know, if we get any talk about a downturn and dampened expectations about next quarter, that could spook the market as well. I think Microsoft, we went through this. They actually beat on earnings, but their forecast they reduced, and you know, they had some concerns. So it would be no surprise at all to see Apple and Alphabet and Amazon have a similar type of situation happen. So what we want to do, this picture is a little bit different. I'm just looking to avoid a disaster here. I think we need to get through Thursday afternoon. We need to get through these 3 earnings reports and not have one of these 3 companies come out and either have a big miss or have an extremely gloomy look on the future. So I think it's already built in that everyone knows, you know, we got a bumpy road ahead in 2023. So some of this is built in, but to have these 3 companies all report on the same day is a big deal. So, and that's just one day after the market is done adjusting to whatever it is that the Fed did on Wednesday. So in the off event that we get back-to-back days of bad news, that could really turn the direction of the market considerably. So I will tell you, I'm not saying that's going to happen. I'm not expecting that to happen, but I do think there's a reasonable possibility of that happening. So this is one of those situations where you want to hope for the best, but plan for the worst. So I'm just going to show you guys one of the things that I do in situations like this. I'm a long-term investor. I don't like to sell all my positions just because I think there's going to be a couple of bad days. But having said that, with this type of potential looming ahead, okay, so this is the SDS. This is the ProShares ultra short S&P 500. So essentially this goes up leveraged when the S&P 500 goes down. So this is a hedge against the market turning around. There are many different stocks like this, and I further leverage this by looking at options. So I'm looking at this option, and again, this is not financial advice. I'm not telling you guys to buy this option. I am hoping that the money I put into this is wasted and that this goes to zero. This is a short-term option. It expires not this Friday, but next Friday. So I'm guessing whatever I put into here, I'm hoping I lose this money. But that means that the market didn't crash and the rest of my investments were safe. So what this is the $45 strike call, and you can see it says 25 cents right here, but the bid ask is $25.30. So even if you had to pay 30 cents for this, just a few weeks ago, this was trading at $1.55. So that would be a 5x if the market were to take a big turn in the wrong direction. And just a few weeks before that, this was over $2. So, there's the potential for anywhere from a 5x to an 8x to a 10x, depending on how badly the market tanks. So obviously, again, I'm hoping to put a small amount of money in here, and I'm hoping that it goes to zero because the market does just fine. But in the event that it does go the other way, this is one of the ways that I try to hedge things. So please be careful. This is an option on a leveraged play. So obviously there's multiple levels of leverage going on here. And again, next Friday, these will be worth zero if they're not in the money. So we got a lot of things to dodge. So hopefully we'll get through all of this okay. But, there is a chance all those things represent a threat in the short term to the market. So this is what I'm looking at this week, and this is what I'm doing about it. So let me know in the comments if you guys have any concepts or any other strategies that you use to hedge against these types of things in the market. So thanks so much for watching. Good luck investing this week. And of course, thanks to all the subscribers and all the members. We do have a members only live stream Tuesday after the market closes. So hopefully I'll see you there. And we have a live stream every Friday after the market closes that is open to everybody. So hopefully we'll see you at one or both of those. Thanks so much and best of luck this week.